welcome to the market update. My name is K Kim with the Traders Club. Today is June 16, 2018, Saturday. I hope you guys had good week trading in the past week or this week. And I hope you guys are enjoying your weekend. And today we're going to be looking, let's keep things simple today. Spider, IWM, and the Qs, and we'll call it a day. Let's start with the Spider here. Obviously, actually dividend was paid on Friday. That's what we're seeing, that gap down. But if we actually go to the cash market here, S&P 500 index itself, you can see we're still in a grinding phase there. So, but you know, these gap down actually still, these dividend gap downs actually still do act as resistance. I've done, you know, I go and looked at them, and these gap down is still a gap down. It's still going to act as resistance, even though it was caused by the dividend there. But so we're going to still analyze the Spider here. I think there are a few things here. Obviously, when you look at things in the long-term perspective, we are in a primary term uptrend, and then we got into that correction phase, and then now, you know, and got into kind of more of a consolidational phase in the intermediate term here, because, well, obviously you can see that we're not in a bear market. We never were. What is the definition of downtrend? Is lower highs and lower lows. Well, we did see lower highs, but we did not see lower lows. So that means that we were never really in a downtrend. If anything, it was more like a triangle consolidation phase, right? Now, obviously, that consolidation is going to come. There's nothing wrong about that. Not like what you hear in the media and whatever people tweet about, end of the world is coming. But after this kind of move, I mean, yeah, of course you're going to see some digestion, some correction, some consolidation. You don't expect the market to keep going higher every single day, right? I mean, if you just go back in history, I mean, when was the last time market just goes straight up all the time? That's what we call an uptrend, higher lows and higher highs. Without higher lows, there's no uptrend. And sometimes that's very basic, yet most people don't understand how this works. And so every time we see a correction, I kid you not, every time there's correction, there's always supposedly a crash coming. Always. So did you know that this move right here from 2012 to 2015, this 3-year move, this move right here was known as the most hated bull run in history? That actually made the headline. That made the headline. The most hated bull run continues. The most hated bull market continues. If this was the most hated bull run, this is the most you know, overvalued stock market ever in 2012 and 2015. What are they thinking here? See, what did they think when we saw this move, which was the biggest buying pressure we've seen in 30 years? Remember, we talked about that. This move since early 2017, like March 2017, all the way to like end of 2017, early 2018. Remember that move? That was a highest buying pressure we've seen in 30 years, 30 or 40 years. We never seen anything like that without any kind of steep correction, right? Well, if this was a most hated bull market or bull run in 2012 to 2015, well, what is 2016, 2017 to 2018, early 2018? What is that? That's just like jaw-dropping, like, what? Like that. It's just everybody's dumbfounded. Like everybody's dumb. Do you remember? I mean, do you remember what people were saying here? I mean, everybody was saying that it's cautionary, warning signal. You know, it can't possibly go any higher. And then we saw that just epic move. It's funny how every pullback, I kid you not, every pullback, there's always, like, you know, like CNBC, Yahoo, find somebody always, you know, bringing somebody and saying that the crash is coming. But people are so dumb. They still listen to it. They're so stupid. They still listen to these people. Not only that, even when I go on YouTube and I look at these people who's been calling crash since 2016, 2014, 2013, who's been wrong every year, they still get thousands of views. Thousands of views. They were wrong in 2016, and then you know, and then they'll call crash in 2018, they'll still get tens of thousands of views even though they've been wrong every year. Isn't that interesting? That's how stupid most people are. And that, ladies and gentlemen, is a good thing. Because the more stupid people there is, the better the smart, the quote-unquote smart, will do. You see? When I say stupid, quote-unquote stupid, because they're stupid, because they're all calling for a crash. I mean, I don't want to, just because they don't know how to trade, they don't know how to analyze the market, I don't want to insult their intelligence in anything else. So I don't want to call them stupid, but when it comes to market, they are stupid, right? But that's the interesting part is that, you know, every pullback, there's always somebody saying crash or somebody saying something. And then market always kind of does its thing, you know, gets into cultivation and then starts to move higher, right? And then a lot of these people who's calling for crash or have a big short, quote unquote, big short position, they get wiped out, right? That's the interesting part. And if you know that, you know, if you've been following me, you guys know that this is probably a lot of people are chasing up here, right? And then they get burned. And then what do? They say, well, I'm in cash. When this happens, they say I'm in cash. And the market goes higher. And then as the market goes higher, do you know what happens? They're scared. They still think a crash might happen. Crash might still happen. So they missed out. They missed out on this whole move. And then as this thing actually gets to maybe 300, start to get a lot of attention and starts to sell out of fear of missing out. What do? They start buying it, and then that's when market corrects. Market continues to punish chasers, continues to punish undisciplined. You know what I mean? Emotional traders. You know what I mean? Looking at Spider, you can see that obviously we're still grinding. You look at these tiny moves. You see these tiny moves? I've been talking about that for months here. That's how the market stabilizes. We don't see these big price expansions. Big, look at the long lower wick, and you can see these tiny moves, right? This is one of the reasons why most new traders think that they're always usually a bear. You know why? Because it feels like bears are dominant, right? Because think about this, like even this move right here, I mean, it took from here, you know, maybe September, this took what, 5-6 months to cultivate, right? And you know, it literally took about a week and a half to demolish it. Right? It took about several months to make that bullish run, and it only took a week and a half to demolish it. And because of that, and a lot of times people who trying to short is because they missed out on this move, and so they trying to short it, right? And it always happens. It's so funny that nobody ever talks about how, okay, I've been writing this thing from here and there, but everybody's always talking about, okay, I'm going to short it there. It's extended. Everybody likes to talk about it. Everybody says always it's extended overbought. But when actually this thing comes down, nobody talks about how this is a good level that is oversold, that we can bounce up here. When this thing pulls down, everybody's scared. That's a human psychology. Everybody's so scared when market starts to pull back. But it's so funny, when market go up, they're inclined to short that for a very short-term gain. That's how most people trade. Most people always miss out the big bullish run, and they'll do their best to just make a little bit on that pullback. That's how everybody trades. It's at least in a social media and you know, in just a lot of stupid people. That's how they do it. And that's not how you're gonna able to accumulate wealth and build your portfolio. But anyway, so we talked about these tiny candles here, and that's kind of why these are the kind of moves that really gonna exacerbate bears, and they're gonna be really exasperated and exhausted and irritated and just downright angry. You know, because they you know, maybe they made some move here on this pullback. They made a quick bucks and it was exciting. It was like a drug. It was like a drug for them. And now it's like, where is that exciting pullback, man? My calls are getting expired. My weeklies are getting expired. Just whining. Just always. I'm sick and tired of this sideways move because they, you know, one of these big expansions. But they do not understand that how this is how the market restabilize. Because that's how the market exacerbates the bears until they give up. And then market continues to grind higher. and resume to its primary term uptrend. And we have this uptrend support there. Not only that, we got that 20 EMA acting as support. At this point, I'm pretty neutral here. If we can't able to gap back up, coming back down to 272, I won't be surprised to see that retesting that 50 EMA in that vicinity as well. If we do see a gap up, you know, Monday or Tuesday, then that might be a kind of a morning star hammer island reversal that could get us back up here to maybe fill this gap and then a pullback a little bit. So we'll see if there's any kind of gap up to make this into an island, and we can follow, and I can obviously tweet that if I see anything like that. But right now we're finding 20 MA here as a support. We got these minor term higher highs here. Again, the tiny candles is going to what makes bears exhausted, but that's how bulls operate. Bulls operate in a manner of consolidations and of these tiny candles, these short-term coiling phases. That's how they do it. But bears don't like that. Bears like to just bring it down. This is a reason why so many people are bear, and so many people think that bears are dominant. And this is a reason why most people are so scared of this area, because they don't know as soon as they go, we're going to see some shenanigan, because they remember this. You see what I mean? And so a lot of times they'll say, well, I'm not doing anything. I'm going to be in cash until we make new all-time high. Well, that's a bad strategy. Do you know why? Because once we make a new all-time high, well, a lot of times, you know, you start chasing it up here, that thing is going to pull back. Either it goes back inside here before going higher, or we start to consolidate, or another shenanigan that happens, right? So market is always really good at punishing the chasers and the emotional and the undisciplined traders. Market's really, really good at that. Market's really good at that if you're feeling needy, right? You're trying to just, and your fear of missing out, you're trying to chase that thing, you're trying to chase that run, you want to grab a little bit when it goes move. Market's really good at just punishing you. So spider looking good here still. Consolidation again, it's 50-50 at this point. We come back 272 pull retest, we'll go higher, right? So at this point, I think, I mean, when I look at the market in overall perspective, market is starting to really starting to look much more healthier now, starting to stabilize and to resume back up to resume its primary term uptrend. Russell 2000 obviously is a leader. I've been saying that the market Russell 2000 is gonna be the leader, and I think it's gonna continue to do so this year and next year. And again, here Russell 2000 holding up well here. We are getting into kind of a overbought sentiment on the weekly as I analyze my weekly charts. But that doesn't mean it cannot go higher. It just means odds are catching up in the short term. So I'm pretty neutral at this point as well on the Russell 2000. If it continues higher on the Russell, I'll just, you know, then I'll just continue to hold my positions. And as it continues higher, maybe I close out some. But if it pulls back, that's a good level to even buy that dip there. That's the thing about me, is that I'm never emotional, because I have a plan for both direction. You know what I mean? Like you guys know that I've been buying the dips on Russell 2000, and I closed out about 1/5 recently at the top here. I forgot where, but so if he continues higher, I'll just keep holding it, and then as he continues to extend, I will start to close out some of those positions. But if we pull back to 160 or something in that vicinity, I won't be surprised. Worst case scenario, this is even coming down lower, just so that it can fake some people out who think that they're so cute with the little bullish support line. You know, they draw and they thought they're so smart. They thought they're so sophisticated, drawing that little support. And the market is very savvy, knowing that you are dumb, but you thought you're smart, drawing that support line, that just awesome support line. Market is going to just get below it, and you say, oh wow, that didn't work, I'm going to get stopped out, and then just goes right without you. So market is just very savvy like that. So when you see support levels, they're just for reference point, not that they're you know, this is like a fixated, like it must be a support, nothing like that. And then you guys, if you've been listening to me, you guys know exactly what I'm talking about. But so I mean, yeah, worst case maybe going even lower, retest 100 SMA. But as of now, let's not get ahead of ourselves. Let's see if we can see if we do see a pullback. 20 MA did act as support on that day, so we'll probably, and this could very well right now kind of really, Russell 2000 has been showing lots of strength. This could very well keep riding 20 MA for a while. This could very well do that. So I would watch the 20 here and the 50 and the 160, some of those levels to watch. Obviously sentiment is bullish. Let's go to Qs and we'll go from, and I'll let you guys go. Qs made a new all-time high right here. You can see that. So basically bears flopped with that island, or not, that head and shoulder pattern. And they've been flopping. I made a demonstration. I did a demonstration last week on my video that how many times they flopped this head and shoulder pattern. So many was scared, so many people are freaking out. But yet again here, that that head and shoulder didn't play out. Yet again, we made new highs. And bears are gonna say that that's a trap. I'm gonna say that that's a cultivation, because when you look at the market here, it makes higher highs and higher lows. That's how we get into an uptrend. So I wouldn't be surprised though, maybe pull back, retest the you know, possibly that 20 MA or so. You can see 20 MA in that vicinity. 20 MA did act as support here, if not the 50 there. But let me do this. Yeah, so you can see we got one for short-term support about 174. It could very well grind higher. Daily chart, we are extended. We are getting to overbought. When you look at your weekly oscillators, though, there is some more room to move. So they could very well continue higher, maybe retest 20 MA, and we'll go from there. So, well, you guys have a wonderful weekend, and good luck trading next week.